to me, that's a very good leader. So they are deserving of that double honor. Thank you so much. We will not be here long. We will not labor the time. My name is Reverend Tay DeWitt of the First Mount Calvary Baptist Church. My partner, Greg Moss, both of us from the Waldner Winters team in Columbia, Maryland. And then Victoria Monet from Direct Mortgage Lending is a wonderful mortgage lender that we work with. And we came to talk about investing, home buying, and how real estate could really be a tool used for your financial future, your financial security. We know there's a lot of investments out there, crypto and other businesses, stocks, right? And it's all very unpredictable, but real estate has been a great vehicle for not only us, but a lot of our clients and customers that change their future. So I'm gonna let Victoria kick us off.
Can we get the slides back up? Perfect. Well, hello, everyone. My name's Victoria. Thank you for the introduction, Tay. Again, I'm with Direct Mortgage Loans. We are a local lender in the area and help many, many clients each year into their homes, whether it's their first, second home, or an investment property. We're here to help kind of every step of the way and really make it a smooth transition for you. I know for first-time home buyers, the whole process can seem pretty daunting. So, we're that resource and kind of shoulder to lean on just to make sure that it's a pretty stress-free process from start to finish. So, a little bit about myself. I have been in the industry since 2018, licensed since 2019. I am licensed in DC, Florida, Maryland, Pennsylvania, South Carolina, and Florida. My company is licensed in many more states than that. So whether it's here or there, we're definitely here to help. If you're moving to a different state or local to Maryland, we can assist in the home buying process. So I wanted to run through the timeline of the home buying process. Is there any first-time buyers in the room? Great. So some of you, this might not be your first rodeo, but just to run through everything. The initial step in the home buying process is to get pre-approved. Now, a lot of the time people think that it does start with the realtor. It can start with either. But the first question your realtor is going to ask you is, are you pre-approved? Have you chatted with the lender to make sure what amount you are pre-qualified for? So the first step in the process is going to be getting pre-qualified with us and just making sure what you're comfortable with and review your overall goals in the process. Now, can we go back one? Thank you. So getting pre-approved, get pre-qualified, they're one of the same. Pre-approval is going to be a little bit stronger than the pre-qualification with document checking and just making sure that all of the blanks are filled in on your actual application. Next comes shopping for your dream home. So that will be with Tay or Greg, where they walk you through different properties and see what really meets your needs and your wants and weighing the two. After that, you'll be ready to make an offer on your house. You'll run through a series of inspections, the appraisal to figure out what your property is worth. From there, we will get your file into processing. From there comes the underwriting process. So where the underwriter will poke holes in everything and make sure that we have the full package and application to get your loan to the finish line. So we'll carry you through from start to finish. So before you begin your search, like I said, the pre-approval process, finding the right mortgage option for you. So one of the things we'll work with everyone for is figuring out how much you are pre-approved for so that you don't go out shopping, with properties or price ranges that are above your means. So we'll give you the top of the budget and then kind of work backwards from there. So figure out what you're comfortable with, and then you'll be ready to hit the ground running with the realtor, Tay or Greg, to get the process started. So how to get started. So in the pre-qualification and pre-approval process, the first thing that you're going to do is fill out the application. So this will be a series of confirmation of your income, assets, a credit check, go over your goals, timeline, and kind of your game plan on that first initial call. So with the credit, a lot of the times people will come to us and say, hey, I might want to buy this year, or, I very well could buy in 2+ years. Whatever your timeline is, we're here to accommodate. So in that introductory phone call, we'll go over, this is a very non-committal process. So whether it's your first house or investment property, we can just have that conversation. If that's as far as it goes, we're kind of here to make it what you want to out of that process. As far as the gathering documentation, simple documents like your photo ID, 2 years of tax returns if we need it. If you do have a standard W-2 position, we'll gather the most recent for 24 and 23, and then your last 2 pay stubs we will gather as well. So a couple questions that we will run through on the pre-approval initial conversation. What is a comfortable monthly payment? So for first-time home buyers, if they're weighing what that comfortable monthly payment looks like, some people say, I don't know, and that's okay. That's something we can figure out throughout the process. A good place to start would be figuring out kind of what you pay currently in rent and working forwards from there. So figure out what you're comfortable with. Where are you looking to purchase a home? One area to the next is going to depend in the price range, as well as property taxes, which could affect your overall monthly payment. So once we have the completed application, we will then go into a series of estimates. So if you're looking in Frederick compared to somewhere in Anne Arundel County, the overall payment is going to be a large difference based on those taxes. So we'll run through different hypothetical payment options to figure out, again, if you're comfortable with the overall payment. What are you looking for in a home? What is your current housing payment, so that rent that you're paying? When does the lease expire? Kind of go over what your overall timeline is going to be. Where your source of down payment funds is going to be, and what your time frame to purchase a house is. So credit is important. If you aren't looking, I would say in the next few months, what we'll do is called a credit soft pull. Is anybody familiar with the term credit soft pull? Great. So the difference between a soft pull and a hard pull is the soft pull will give us access to the trade lines on your credit so that we can get you pre-qualified up front. However, it's not going to be a hard hit on your credit just yet. So we'll have access to get you pre-approved with that initial credit check, but we won't do that initial pull until you actually are getting out there and starting to submit offers. So you can check in and see where your credit's at. If there's anything you need to work on, that would be the time to do so with that credit soft pull. So a couple things that improves the credit score. Having a credit card balance. Now, this is kind of contrary to what most people believe. A lot of people have been taught that a credit balance is actually bad. However, if your utilization ratio is under 30%, it actually improves your credit. So that's one thing that can give credit a little bit of a boost. Of course, paying bills on time, not applying for new credit. Let's say, for example, you don't have a credit, so applying for it, it could decline your credit up front. However, once you continue to make payments and make them on time, it could overall boost the credit from there. Be patient. Credit building does take time. We always suggest that people have at least 3 trades lines on the credit to continue to build and, just like I said, make payments on time. So a couple of things that hurt your credit score. Late payments, of course. If there are any late payments that have been made, the further away we get from those, the better your score will overall get. But any open 30-day lates or 60, 90-day lates, those are going to continue to negatively impact your score. But the further you get away from those, credit will continue to rebuild and get to where it once was. Opening new credit, that eventually will boost up your credit score. Paying off installment loans. Co-signing for debts, collections, things that could rebuild your score, or closing out accounts, get a secured credit card, and become an authorized user. So a lot of times if people come to us and say, hey, I might have a credit card, but I don't think I have credit established just yet, we'll recommend that you then become an authorized user. So if you have a trusted friend or family that you're able to become that authorized user, you can essentially mimic their open trade line of credit. So if they have had years and years of positive payments and making them on time, that can simulate their credit for yours. So one thing, if clients will come to us and say, hey, my credit's not so great, I have my banking app that tells me my credit score is a little low, is there any way that you're able to help? Or people will come to us and say, hey, I'm not where I want to be yet, I don't want to apply just yet. One of the benefits of doing the initial application would be that we can assist with the credit repair. So we have a credit what if simulator. So if your credit was a little lower, we have an application called Wayfinder where we are able to give the credit a boost and create an ultimate game plan where we can get your credit to where it needs to be in a series of months and figure out what we need to do to exactly get there. So that's something that we provide, no cost to you guys. So if you're able to complete the application, we can certainly assist with that. So get your offer accepted with us. What we would do to really strengthen the offer once you find the property of your dreams, we submit the offer. What we will do to strengthen that is give the listing agent a phone call. Let them know that you as the client are in great standing financially and just run through different qualifications that would make your offer stand out. Now, because we are a local lender, that alone strengthens the offer. So just knowing that we are a trusted loan officer and loan team, so we're able to get you to the finish line, will really help kind of go the extra mile in that regard. Loan commitment at pre-approval, so we're able to run your file completely through underwriting from start to finish with what's called our TBD approval. We do that with many of our clients really just to make their offer stand out, just because with, unfortunately, the way the market is right now, it's pretty competitive, so every little bit in the puzzle helps. 15-day close is possible. So we can work on a quick turnaround, so if that's what the seller's looking for, we're able to work pretty quickly. We've done a handful of 10-day closings less, so that's what the offer ultimately needs. We're able to accommodate to that. Now, I know that was a lot of information to take in at once, but does anyone have any questions? Awesome. So a couple of mortgage myths. One that we just kind of touched on through the credit. You need a perfect credit to buy a house. So our company can lend with credit scores in the 500 range. With certain programs, if it needs to be in the 600 range, like I said, we can assist to get your credit score repaired to qualify for that. But there are certain programs that we can lend in the 500, 580 specifically is how low we can go. Sure.
My question is, do you need to have 2 years of tax return from the same company?
No, nope. So it can be from different companies. What we would do is just verify with each company. We just need that 2-year working history. So whether it's 2 positions or 3, we just need to log all of them in the 2-year span.
All right, thank you.
Another common mortgage myth is find the home first and then worry about the financing. So that's one of the things that we really kind of harp on, is just to make sure that you have all your finances and ducks in row so that you're ready to go once the home comes. Because if you see a house hit the market, the likelihood of it getting swooped up is pretty likely in this market. So making sure that your finances is in order well before that time frame is definitely a great idea. Another myth is my debt will prevent me from getting a mortgage. So like we went over, debt is not a bad thing. As long as it's under that 30% ratio, it's not bad whatsoever. It actually can help you as long as the utilization is within that range. Another mortgage myth is making a large purchase before closing will not affect your home buying process. So, if you were to open up a new credit, whether it's a credit card or open trade line, That in turn could affect your overall qualifications. So, a lot of the times you hear people say, don't go furniture shopping or buying a new car before you go to purchase. Do that after, just because you could be able to qualify for more of a purchase price if you hold off on doing that. Now we'll run through some mortgage programs on the next slide. So you do not need 20% down to purchase a home. Now that's another common misconception with the home buying process. You do not need 20% down. There's a lot of different programs with, I would say, 3 to 3.5 is going to be the minimum required down payment. With FHA, it is 3.5. Conventional, it is 3 for first-time home buyers and 5% for subsequent buyers. For VA mortgage, it is a 0% down payment if you are a veteran. USDA mortgage is also 0% down as well. So if the property is in a rural area, you may qualify for the USDA. Now, second home versus investment home. So if you own a home currently, this, of course, everything we've talked about might not be your first rodeo, but with second home and investment properties, there are a little bit different qualifications for these. So typically for the second home, you're going to need 10% down payment. For the investment side of things, you're going to need at least 15% down. Now, with investment properties, as you continue to put more down, you're going to get better pricing. So the overall interest rates and programs for a primary residence in comparison to an investment property are going to be much, much different. So interest rates are going to be higher for investment properties. So the more you put down, the better the terms will get. So if you're putting 15% down, as you put down 20%, 25, the 25% down is going to be a little bit better pricing than the 15. Any questions? Awesome. So just a recap of the pre-approval process. Apply is going to be your first step. Credit check, we do that for free. We do not make you pay for the credit check. We'll create your personal plan overall with what we see on the application, and all you have to do is apply to get started. So get pre-approved using the DML app. We are very fortunate and do have a pretty tech-savvy application that you're able to download if you have an iPhone or a smartphone. Pretty user-friendly. You can complete the initial application. We have a mortgage calculator on there as well. It helps you run through different scenarios on your own. If that's not necessarily your speed, we're more than happy to run the estimates for you, but still gives you that option if you would like to be more hands-on in the initial numbers of it. So once you're pre-approved, now what? So here are the next steps. House shop with your realtor. Greg and Tay are wonderful with the Waldner Winters team. Send properties to our team to run the numbers. So usually after I have our clients complete the initial application, I'll have them send over maybe 2 or 3 properties. They're looking in different areas, so I'll probably have them send over 1 in each so they can see how in turn that is going to affect the overall payment. So when house shopping, don't make any big purchases like we just mentioned. Open any new credit trade lines or start a new job before consulting with our team. So of course you can have multiple jobs in that 2-year span. However, if you are under contract or close to submitting an offer, you don't want to switch jobs in between just because we will need the W-2s and income verification with the new position. So benefits of working with the Hyatt team, we have great communication. We're an open book from start to finish just to make sure that you're well taken care of. A team you can trust. We're a local lender, so we have a great experience in the area, know the ins and outs of the Maryland market specifically and other states, and the process is very much so in place. So that's that for me. Thank you, guys. Sure. Not here, okay.
You have to be a citizen? Okay, all right. So the person wants to know, do you have to be a citizen or a green card holder to purchase a home as a first-time home buyer?
Yes, yes. So you do need a green card or citizenship to purchase. Now, there's different scenarios where I'm more than happy to take the initial call and kind of walk through what that would look like in obtaining that to kind of get you on your way to home ownership, if that's not necessarily the case.
Okay. Another person wants to know that if they can open like a, I think it's called secure card to build up the credit in order to purchase a home, let's say within 6 months. Because I used one of those programs when I purchased my first home in 2008.
Yeah.
So, so can the person open a line of credit for unsecured card?
Yeah, I mean, every trade line is going to help you. So I would say if you're further out in the process, a few months out, it doesn't hurt to open new trade lines and just continue to have positive payments. So there's a couple of trade lines that we do suggest. A really easy one to help build credit is Fingerhut, if anybody has ever heard of it. Yeah, it's good at building credit, and it helps even if it's a small credit card. Every positive payment helps. So there's a couple that we suggest that can definitely get that credit up.
So with that, for first-time home buyers, if you're a student and you're having a school fees loan, does it affect any like the application?
No, well, what's actually really great about a lot of the deferred student loans is right now we just take a portion of the payment. So if people aren't necessarily making the payments on that, we'll just take a 0.5% to use for the monthly payment of their overall balance. So we have people every day apply with student loans and it doesn't negatively impact them just because those overall loans are pretty low in payment. So the biggest thing that we see as a hurdle is people who come in and maybe have just purchased an auto loan. With the rates and how everything is, unfortunately, right now, those payments can be pretty hefty. So I would say that's the biggest one we do see. But usually 9 times out of 10, student loans don't negatively impact your qualifications since the payments are so low.
So the only option that we had as a second home buyer is to put 10% down, or there is no another option for that?
10% down is going to be the minimum for second homes. Now, there is a program that allows you for a multi-unit of 1 to 4 or 4 plus units, you're able to put down 5% if you're living in one of the units. So that's kind of a loophole if you were to find a property that was the multi-unit. Otherwise, those investment loans, 10% is going to be the minimum down for second housing and 15 down for an actual investment property that you would plan to rent out.
Okay. So another question, you can use, for example, if you want to buy a second home and you already does business like Airbnb, Booking.com on your first property, you can use those income to buy a second home as an investor?
What was the question one more time?
If you have your first home and that first home you make it like a business place like Airbnb or Booking.com, you make money with that house.
Yeah.
So you can use that income to buy the second house like an investor?
Yeah, you absolutely can. And one thing people do too with their primary residence is if you've been in the home for quite some time, leveraging that equity that you've built up in that first property. So a lot of people will get what's called a home equity line of credit or a HELOC and leverage that equity that you've grown in the first property, take out that equity loan, and then use that for the down payment on the second loan. So that's a really great option where you can use your assets in the initial property that you've grown significantly over the years.
I have a question. Can you use more than 30% out of your secured credit card and pay? And when you pay it on time, is it still gonna affect negatively your credit, or if you pay it on time fully, it's not gonna affect that?
So if you're paying it on time, it's really not going to negatively impact your credit. Usually if you have, let's say if you're maxed out on your credit card and that's sitting significantly, but you're still making the payments, you're not gonna see your credit, let's say, drop from in the 700 range to in the 600. It will be very minimal fluctuating points. We suggest keeping it under the 30% range. Of course, with the way the economy is right now, unfortunately, that's very hard for most. So it's not going to make your credit significantly dip the way it would if you were making a late payment. So It's not necessarily, a bad thing to have that balance on the credit. We just make the suggestion to keep it under the 30% to make your credit continue to increase.
Good afternoon. First question, I want to know is that your credit gonna help you qualify for more money or your income?
So income, actually. So the credit will help you get better terms on the overall mortgage. So usually better credit means a better interest rate. Of course, that will depend on the program itself, but what's going to qualify you for a higher purchase price will be your income. So one of the things we look into is the debt to income ratio. So the debts that you currently have on your credit compared to what you're bringing in each month.
Second question, do you have any program for nurses?
We do. We have a series of great down payment assistance programs, nurses being one, where you're able to put 3% down for a nursing program, and it's a little bit cheaper of the mortgage insurance as well.
All right, thank you.
You're welcome. Awesome. Well, thanks, guys. Yes, throw them at me.
Just want to know, do you guys also have programs for students, for first-time home buyers?
We have a lot of first-time home buyer programs. Maryland Mortgage Program is a really great one that helps first-time home buyers and even non-first-time home buyers. There are certain programs that we can help with, but we'll help provide the down payment assistance if you don't necessarily have the funds for your primary residence purchase. So certainly a wide range of programs that we have at this company for sure. Awesome. Well, thanks so much. I always say with the questions, no question is a silly one. So if you're holding in one that you don't want to ask or you feel silly to ask, feel free to run it by us. Cool. Oh, sure.
Can you please explain to us the differences between the mortgage, the FHA loan, conventional or whatever? What qualify you, for example, as a first-time or second-time home buyer to be in a conventional loan or FHA loan, or the last one was what, the USDA mortgage?
No,
what is it exactly?
That's a great question.
Okay, thank you.
So with conventional financing, that debt to income ratio that we talked about, you're going to want to see that be 50% or lower. So if you're making, let's say, $60,000, your debt to income ratio, your debts need to be under $30,000 in spending with the mortgage and any credit or debts that report on your report. Now, with the FHA financing, we can go a little bit higher. So FHA gives you a little bit more wiggle room if you have more credit card debt. So we can go up to 56.9% with the FHA financing. If your credit's a little bit higher, conventional might be the better route to go, just because your overall pricing with interest rate will be a little bit better. If you have a lower credit score, FHA might give us a little bit better pricing there. Great question. So USDA really is kind of a niche loan option. If it's a rural area, certainly makes sense to take advantage of that with the 0% down. But it really just has to be that specific property that will be able to work in that scenario.
And what's the minimum income you can make to be a first home buyer?
So it really depends. It depends on your credit. It depends on the specific property. So, the more income you're bringing in consistently each month, you're going to be able to qualify for a little bit higher of a purchase price. If you make lower, we can certainly figure out what your maximum pre-approval amount is and figure out if you're comfortable on a monthly basis. But there's a lot of different factors kind of that go into that. Credit, income, property, I would say. But that's something we can certainly figure out throughout the process to figure out kind of what that number would be for you. Awesome. Well, I'll hand it over to you, Tay.
Thank you so much, Victoria. Can we give her a round of applause? Awesome. My name is Tay DeWitt. Like Victoria said, I'm with the Waldner Winters team in Columbia, Maryland. A little bit about me. I have been in real estate for about 5 years, been a licensed agent for about 3, and really took a passion for helping people invest. So experience with buying, selling, and investing. And my mission really is to change your thinking a little bit. So Victoria went over, how to buy a home, first-time home buying, second-time home buying. And with that, there's always the thought of, if you're not a first-time home buyer, I'll never own a house. If you are a homeowner currently, well, investing is for the super, super rich, right? You need millions and millions of dollars to invest in real estate. It's really not true. And so that's my purpose here today, is just to change your thinking a little bit about how you view real estate and the possibility of investing. So according to the National Association of Realtors, the median net worth of a renter, so that means you don't own a home, you're renting, it's about $10,400 in 2024. While the median net worth of homeowners is around $400,000, right? So just by buying your first home, your net worth increases tremendously, and then an average of additional $200,000 is added per rental property owned. So every property that you buy, most people think, well, it hurts my income, makes me look like I have a lot of debt, when really it's increasing your net worth tremendously. Common myth, I will never own a home. In Baltimore, where my church is located, we have tons of people, they come up to me every day and say that, right? I'll never own a home, it's too expensive, I don't make enough, my credit's too bad, I'm in too much debt. They have all these reasons of why they can't own a home, and it's not until we have a deep conversation, give them the resources we have, that they see that it's very possible. Now, real estate investing is only for the rich, right? Anybody ever thought that here? That you gotta have millions of dollars to invest in real estate. It's just not true, especially if you're already a homeowner. We'll get into that a little bit later. I don't have the time to learn how to invest in real estate. Investing in real estate, it can be time consuming, right? Learning how to do it right. But that's also why you need the right team behind you, right? If you try to do it yourself, it can be daunting. When you have great realtors, great mortgage lenders, great contractors, great resources, it becomes a lot simpler. Rates and prices are too high to invest in real estate. In the economy we're in now, times are hard, right? Eggs are expensive, gas is expensive, interest rates are up, right? It's tough. Over 960,000 homes were sold as investment properties last year in real estate. So even in this tough economy, right, almost 1 million houses sold as investment properties in America. Benefits of investing in real estate. Passive income, right? Rental properties provide a steady stream of income from tenants paying rent, which can supplement your regular income or eventually replace it. We get a lot of clients, right? And they believe that having a rental property is just an expense, right? They have to pay for 2 mortgages, they can't afford it, it's too hard. When the truth is, if you own a home already, well, you have an investment. You already own an investment property. If you're looking to get a second home, you can very well keep that home rented out and make more income from it. Appreciation. Over time, the value of houses increases. So unlike a car, the second you drive a car off the lot, it loses value, right? The very second you put it in gear, it loses value. Houses are the opposite. Nationally, we have about 4% appreciation in homes across America. Of course, every area is a little different, but your house increases in value. Tax benefits, several tax deductions available for rental property owners, including property taxes, mortgage, interest, repairs, maintenance, and depreciation, which can reduce your taxable income. Anybody here ever excited about paying taxes? No? Right. Equity building. As your tenants pay down the mortgage, you build equity in that property. So much like many of you that own a home, right? As you pay it down, you're building equity, right? So the house is increasing in value and the debt on the house is decreasing. And then inflation hedge. Real estate often outpaces inflation. Rental properties can adjust rents to keep up with rising costs to make rental properties a stable investment in uncertain economic times. For anybody that's ever rented here, you know at the drop of a hat, landlords will raise your rent, right? They'll do less for you, they'll raise your rent consistently. That's to keep up with inflation. So when you're the landlord and inflation's rising, you're investing money into this property, you can raise the rents. You control the rent. Some other benefits are leverage. Real estate allows you to leverage other people's money in the form of a mortgage to buy an asset that will appreciate, increasing your return on investment compared to paying entirely in cash. So there are several investment strategies that allow you to leverage the money of others. Private lenders, hard money lenders, right, where it's not as competitive, it's not as difficult to get these loans, and partner up on owning a home. I think our team leader, Nick, about 6 people on the team, he owns an investment property with, right? And these are people that work with him, and he owns these properties and collects income from them. Control, stocks, bonds, crypto. We hear all types of different investments that are completely out of our control, right? We don't know where stocks are going. We don't know where the bond market's going. I don't understand crypto at all, right? But real estate is a hard asset. You can see it, you can touch it, you determine what it's worth, right? You want to sell it, you can sell it. You want to upgrade it, change the floors, the painting, you can do that. Want to make it bigger? You can do that. Want to make it smaller? You can do that. You're in full control of your investment. Diversification. So it reduces the risk of having all your assets tied to the performance of other markets. Right, again, we can't control where inflation goes. We can't control when we get a raise, when we get a promotion. With real estate, you're in complete control of what it's worth. Wealth building over time. Rental properties can be a great way to accumulate wealth. Once the mortgage is paid off, you can enjoy the benefits of a property that generates income without significant ongoing costs. And then retirement. Anybody here want to work until the day they die? So we all want to retire, right? This is a great vehicle to lead you to retirement. Just to touch on this a bit more, we have several clients. They call us every year around the same time, around the same month. Reason being is these clients bought their first home with us. Then the next year, they moved out of that home, kept it, and got a second one. Then the next year, they moved out of that home and got a third one and rented those properties out. Now, the gentlemen that I personally work with, all of them are under 30. It's about 3 of them, all of them under 30, and own 2, 3, 4 properties. Year by year, they just buy a new one, rent it out, and now they have supplemental income, passive income, right, under the age of 30. And so the belief that we can never own real estate, we can never be an investor, you got to be super rich, it's just not true. Especially those that have owned the property for a long time, right? We saw appreciation, right? So the mortgage is going down year after year after year as you pay on it. It's going up in value. Believe it or not, you can actually leverage that equity that you're building, right? So as your property raises in value, as the equity or as the mortgage goes down, you can leverage some of the equity you've built to buy your next property, right? My father just did it with his childhood home that he grew up, raised by his grandmother. He was able to buy that back just this year using the equity that he built in his own home. Right, so not only is he able to get this rental property, but he's able to keep a family heirloom in the family. Right, real estate's really a powerful thing for building wealth, a vehicle towards retirement, having income. Any questions? Questions, comments, concerns, declarations of war?
Okay, you mentioned about you made an example about a gentleman that was purchasing, living in the home, and move out and buy a next one. So, is that with the FHA program?
I believe he used conventional for each one. So he was required to live in the property for a year. He's allowed to move out. What this particular gentleman also does is, being under 30, he's no stranger to living with roommates. And so he rents out the additional rooms in his current property as well. So in his first property, he has about 4 tenants. And the current one he just bought late last year has another 5 tenants, right? All producing income, all paying rent, and his expenses are completely negated in doing that.
So with FHA financing, it does have to be your primary residence. However, if you're doing it that way, if you would initially buy your primary with FHA, move out of that, you can still have that FHA loan. You can get a new FHA loan then on the second property as long as you intend to live in it.
That was kind of the question that I have to know. After how long can you have tenants at your property when you're a first-time buyer or just trying to rent rooms just to kind of save some money?
Usually about a year if you're going to depart the property. Now, you can have people move in if you wanted to get roommates to help pay for the mortgage right up front. So if you bought with an FHA property, you could certainly do that just to offset some of the mortgage costs.
But you must live inside the property.
But you must live inside, yep. For at least a year, yep, before you leave the property. Yep. With VA, it's actually the same. You would need to, you can't have a VA loan if it's a secondary property. However, if you are intending to keep that property but moving into another as a VA, you do have additional entitlement. So depending on the overall VA entitlement, you can qualify for 2 VA loans at one time. Now, if you're going to, refinance later on, you would have to get out of that VA financing because you have to be living in the property. So that would kind of be the catch in that scenario. Yep.
Okay, so if you have your primary residence and let's say you have 2 other businesses, can you use your businesses to purchase investments property? And how long do you have to wait? Like, let's say if you use business A, you purchase, how long do you have to wait before using the second business to purchase another property?
There's not necessarily a time frame you would have to wait. So if you want to use the business income to purchase the property, you absolutely can. There's not time requirements related to that typically.
I just have like a curiosity question. For example, you buy a house with your friend or your partner, and one of you cannot sell it, right? Even if you guys don't get along anymore, so one of you cannot sell it without another person's permission, right?
Yes, if I'm understanding the question, you bought a house.
For example, you buy a house with your friends or your partner. So you guys, one of you decide to sell it, but another person don't want to sell it. So one person can go ahead sell it without your permission?
No, so you would need to come into an agreement if they're on the title of the house. Now, if they're just living there and contributing and you're the only name on the title, you're more than welcome to sell it. If they're on the title of the house, you do have to come to an agreement before moving forward and selling it.
One thing to note too is people can be removed from title, but you cannot be removed from a mortgage. So if both people are on the mortgage, it has to stay that way unless you were to do a refinance. So that's one thing to note too.
Anybody's perception or thoughts on investing and owning real estate, any of that change today? Couple of head nods. Did your thoughts on investing in real estate, did that change from what we went over today? Awesome. And that's really why I got into this industry, right? Is to change the thoughts, right? Of I'll never own a home, I can't invest, it's too expensive, it's too tough. Question?
I want to know if two people want to buy a property, are you guys combining incomes or are you doing like separate check?
Yes. So what we would have you guys do is fill out a joint application. Thank you. A joint application. So, you know, let's say one person was making 60,000, the other person was making 45,000. We would then combine that income for your overall pre-qualification. Yeah, so it could be, there's a few different ways to do that. So, you know, sometimes we'll have a client that needs a cosigner for the property, but is a non-occupying cosigner, which is allowed with certain financing. So you can do it that way. You can buy the home together where you both intend to live in it. So there's a lot of different ways that it can be held, the home.
Any other questions, comments? Have we bored anybody yet? Y'all ready to leave? Well, thank you guys so much. I'm gonna turn it over to my partner, Greg, to close us out.
Thank you very much. So I don't have a PowerPoint presentation like those two, so a little unprepared, but just a little bit about me. Like I said, my name is Greg Moss. I'm a realtor, only for about a little over a year. I came from a family of public service, so all the men in my family were either in government, the military, or law enforcement, and all the women in my family were nurse practitioners. So I grew up knowing I wanted to do some type of public service. After graduating college, I basically went into following my father's footsteps in the federal government, but that didn't fulfill me at all. And it wasn't until my grandfather passed and went through probate is what I realized that my true calling is wanting to help people, one, get through the probate process and making sure that they didn't have to deal with the 16 plus months that I had to deal with my grandfather going through that type of experience. And so my main mission in my life is trying to help people obtain, protect, and grow their generational wealth. And as a realtor, it starts with potentially buying real estate, but it doesn't have to be. So if you're not ready to potentially buy a home or an investment property, there are other ways you can do to generate wealth. And generational wealth might be thrown around a little loosely, but it starts with having the knowledge and information and having a good team around you to help you that process. So I coined the term a wealth advisory team, which is usually made up of a realtor, a estate planning attorney, financial advisor, a CPA, and an insurance agent. And the biggest thing is having a good estate planning attorney. But just to show of hands, who here actually has an estate plan that they currently have? So that's not surprising because only 30% of this country has an estate plan, and a lot of times people don't understand why they need one. So I kind of want to make this a little bit more back and forth and just people asking questions. What would be, I guess, your questions of, does anyone know what an estate plan is, like the importance of it? Just overall questions of what you feel like you need to understand about what an estate plan is. So. No, so you don't need to have a house to have an estate plan. So an estate plan overall is comprised, so like a lot of times I always say that having an estate plan everyone needs to have one, but once you turn 18, it's something that there's certain documents in an estate plan that are very critical. Usually there's 5. So they're called powers of attorney, whether it be medical, so someone that if you are incapacitated or in a coma or just unable to make a decision yourself, you have the ability of someone else to make a decision for you, whether it be a medical, so health directives. It could be also a second type, general financial power of attorney. helps you pay bills if you're in the hospital and you can't do it yourself. Um, the most common thing is having a will. So that is what is needed so that when you pass, you can actually have your wishes kind of relayed to the court so that everyone knows that when you pass, whatever wants to happen in your family's finances or assets, it could actually be passed down to those people without the government intervening. Because the saying goes, if you don't have an estate plan, the government has one for you, and you're not going to like that. I mean, I don't know about you, but I don't trust the government to run my life. So if you don't either, it's taking control of your life by having certain documents in place to make sure that your wishes are upheld, even when you pass. That's something that I feel like is one of the critical keys to having building your wealth is by protecting it. So the biggest robber of wealth are taxes. So most people feel like they don't need an estate plan because they don't have a whole lot of money, but it's more on helping protect you when you're alive as well. And so that's why the powers of attorney are definitely critical. Having what's called a HIPAA form so that someone has access and be allowed to see what type of medications you need, being able to make decisions on your own when you're incapacitated. Well, an estate planning attorney is the best choice, but I personally have built my business around working with estate planning attorneys across the state of Maryland with the main goal of free information. So even if you feel like you don't want or need an estate plan right now, at least having an opportunity to speak with an attorney so that they can, one, understand your current situation, and that if give you ideas of things you might need to help better secure your plan. And one of the biggest things that people bring up is the fact that they feel like it's too expensive. And the cost can range. Trusts, which is a type of documented estate plan, can be expensive. It could range from as little as $3,500 up to tens of thousands of dollars, depending on how many assets you have in your family. But overall, like a will and the basic estate plan could cost right around $1,000, which can still be expensive, but at the same time, you could pay either for the documents individually, which could be very cheap, but also I just tell people not to have that be the reason why you don't get one set up. So talking with a good estate planning attorney gives you an idea of what a plan might cost you, and then in my mind, I tell a bunch of my friends who refuse to get one because they don't have the money for it, is just budget for it like you do for anything else. Set aside for whatever amount of money so that this time next year you have the ability to get that plan set up. And I think it's extremely important for kids, people with families that have kids. Like I have a 5-year-old and a 2.5-year-old, and guardianship is one of the biggest issues that if you don't have your wishes kind of put down in writing of what you want to happen just in case both you and your significant other passes, what's going to happen to your kids is usually they're going to, if the families can't agree on who's going to take care of them, they go into a foster home until that decision is made. So I just stress the importance of making sure that overall you have the ability to make the decisions for your family so that the government doesn't make it for you. That's pretty simply what I tell people.
If, let's say you did not have an estate plan or a power of attorney or anything, and you have a sudden death and you have a family, will your funds go to your family or will directly go to the government if you didn't write it down or anything?
Yeah, so it's going to go to someone in your family. So it only goes direct to the government if there is literally no one in your family line. So what happens, it's a laws of succession. It depends, varies by state, but with Maryland for the most part, if you don't have a will or any type of estate plan, then it goes to directly your spouse. If you don't have a spouse, then it goes to your kids. If you don't have any kids, it goes to your parents. If you don't have any parents, then it goes to anyone that's related to you. And then if the government can't find a single soul that's related, no cousins, nothing, then it goes to the government where they put it into public schools and other public programs. But that doesn't happen all too often because there's always someone that's related to you. And then you don't want to have some random person you never met getting your money because you didn't know they exist. So.
could you explain the difference between the trust and the will? Because as you stated, the trust is more expensive. Is it easier for the family or say the spouse to get whatever is left behind through the trust than the will?
Yeah, so a will, all it does, you're still gonna have to go through probate, but will just allows you to explain your wishes, exactly what you want to happen with either your assets, anything in your life, but you still have to go through the probate process through the government. And in Maryland, that takes an average of minimum 7 to 8 months. So let's say if you do have like a home or just some type of assets, if you have a will, you will be able to get passed down to whoever you identified as who you want to inherit your property, but you still have to go through that process. It's still going to cost you money, court fees, attorney fees. Usually it's like 5 to 8% of your total net worth gets taken away just to go to the government. So a trust bypass that. Oh, and plus probate's public. So anyone could gain access to the register of wills, figure out exactly how much you owe, how many debts you owe, what type of assets you have, who's in your family. So a trust is private. So it costs a bit more money, but you have more freedom and you have the ability to differentiate like what exactly want to happen. So if you have, let's say, multiple kids, maybe one has a substance abuse problem or some specific thing where they need special attention, you can, in a trust, clearly articulate exactly what you want to do to make sure that your kid's taken care of. In a will, it's not that easy, so that's why it's a little bit cheaper, because trust, like, it costs more money, but you have a little bit more flexibility and more freedom to kind of do what you want with your assets after you pass. And then overall, like, there's other aspects, everyone knows, like a financial advisor and like a CPA, insurance agent, but I just bring those up because if you do have a home or you start purchasing investment properties, having a team surrounding you that actually is more experienced in those fields will give you a better sense of how to maintain your wealth and different strategies to actually protect it and grow it over time. So I'm proud of the fact that my team, the Walden Winters team, we are a relationship-based real estate team. We're not transactional. And what I mean by that is we don't just work with you and kind of cast you aside and ask a number. If you work with us, we work with you for the rest of your lives. And then ideally, like if you pass, then we work with the family, because we want to be that center hub of, if you have any questions whatsoever, you just ask us and we take care of you. So whether it's just real estate related or anything else in your life, whether you need a dentist, a doctor, any type of thing, you just come to us, because we have connections across not only the state, but the country, because we proudly built our business around just creating a central hub that supports our clients in any type of issue that they need. So that's something that I'm personally proud of, so that whenever you work with us, it's our mission to kind of put you guys in a better situation than you were than when you originally met us. So it's our goal, just like anything that you need, like we're there for you. So, yeah.
When people have estates, do they mention a specific person to whom it should go to? Because I see people coming with an estate, and I know like when you have a beneficiary, the funds go to the beneficiary. But when it's the estate, they actually mention your name as you inheriting the money in the estate. And if it makes sense.
Yep, that's correct. So, and if it's just a will, so it's gonna be probated, you can literally go to the Register of Wills online and see who is actually gonna be the beneficiaries of your estate. So if you have a little bit of money, scam artists and predators can see exactly who's gonna inherit from your estate and kind of reach out and potentially scam you. So the biggest issue is it's so public that anyone can find out like almost any bit of information about your life that comes up in your estate. So that's something that I personally say that at the very least, starting with certain documents that kind of help protect you when you're living. So having that medical power of attorney, durable power of attorney, those all, I believe, only cost a few $100s. Like, don't quote me. Like, if you're interested in learning more, I can put you in contact with a large range of attorneys that I know, that I trust, that I've contacted and vetted. But it's just having the knowledge to know what you need, and if you don't either necessarily have the funds, or if you don't believe you need it, at least you have the wherewithal of knowing what you need to do in the future to kind of make sure that your family's protected. Because I'm kind of dealing with this with my in-laws, where they don't have a estate plan set up. They have 6 kids. They have multiple assets, not only here, but in other countries. And my father-in-law said that when he passes, he's just gonna let, his wife, take care of things. And it's not very funny, but I always say, what's the point in having like your significant other deal with something that's as hard as dealing with death and figuring out what's gonna happen with the assets? Do it together. So don't just put it on your spouse when the husbands usually die first. So they just kind of leave it on their wives to take care of it. I say do it together as a family, because it's a lot of hard decisions. Like, no one wants to talk about death. No one wants to think about it, but it's the most certain thing that's going to happen. You have home insurance. You have car insurance. You need to have insurance of your life, knowing that you have life insurance, basic ones, but you need to have idea of when you pass, how you're going to protect and take care of your family that's can be left behind. So there's many ways to do that, but peace of mind knowing that your family's in better hands because you took a little bit of time and money to lay out how you want your family to be in a better position when you pass is something that I feel like is definitely necessary, and it might be tough, but it's a lot harder when you're going through the court systems for 2 years dealing with paperwork and after the passing of your loved one and still dealing with that stuff. It's not fun. Experience it firsthand, and that's why I want to make sure everyone understands you can kind of avoid that. So.
Can we please go back to the real estate? I wanted to ask question about the ELOC thing program,
Yeah.
please.
That's a Victoria question.
Yeah. So I hear a lot of people talking about the equity home line, that's how you say it, and that you can get the equity that you have in your house to invest or purchase another home. So I want to know if it does not affect anything with the loan that you have previously, because I had called my lender at some point. I wanted to have a little bit clarity about it, but they told me that they were not doing that. So you have to go chase another lender that can work things out with you to do something like that.
Yeah, some lenders have certain requirements with the HELOC and the primary for some reason. That's not the case in our company, but if you have at least 20% equity in the house, you can get the equity line of credit without it affecting anything on your initial mortgage. So they will be two separate. The line of credit will be the second lien on the property, and you would still have your initial first lien, the mortgage.
Okay. So it doesn't affect anything on your previous loan?
No.
Like when you do the refinancing thing?
Nope, it'll be separate. So all the terms of your initial mortgage loan will stay the same. So the interest rate payment and everything will remain the same.
Okay. So you can work with somebody to have another lender for the HELOC?
You absolutely can. Yeah. So we can help take a look and see if HELOC would make the most sense for you in your scenario if you were looking to invest on another property.
All right. Thank you.
Some people even use home equity lines of credit to pay off different debts. So if you had credit card debt and you wanted to utilize that, or if you had improvements you wanted to do around the house, the HELOC might be a good option too. So it doesn't necessarily have to be for the down payment on the next property.
So then at this point, when you get that equity out, what is left on the house? Does the house still have the same value or?
Yeah, the value would stay the same. You would just be leveraging the equity. So let's say you bought the house for $300,000. Let's say your mortgage balance was paid down to $220,000. You could leverage that equity in the property, and it would still hold that same value. You would just be then using the equity that you were grown. So instead of sitting on your bank of money in your house, you could then just use it for other things. You would just have an additional payment for the home equity line of credit.
Okay. And in that case, does credit score matter still?
Yep, credit will matter for the home equity line as well.
Okay, you have to be in what range?
It really depends. I mean, for each HELOC, there's different requirements, each company one to the next. But I would say as a rule of thumb, the 600 range would be preferred for the HELOCs. It really just depends on the specific investor.
Okay, thank you.
You're welcome.
Also, sorry.
No, ask away.
I'm just saying that because I didn't have all that clarity when I did my first purchase. And I know that there's some program that help first-time home buyers. And some people, when I may be lucky to work with agent that will tell them upfront that, for example, in the city of Frederick, we have this and this and this program that help for first-time home buyer. So are you the kind of person that while we're shopping or while we're working through it, and then according to the places, for example, that we have in mind, let's say that I want to purchase, but I don't know if I want to go to Frederick or Montgomery County or Virginia, are you able to bring upfront what are the advantage that we have through the program that is out there for the different county to allow us to go, for example, for what offer better?
Yeah, absolutely. I mean, that's something that we'll really run through after we have the initial application. So if you have a wide range of places that you are shopping in, we'll likely have you send an example property, a place that you might not want to see, submit an offer on, but you could see yourself living in Virginia, in Frederick, to see how the monthly payment will be different from one to the next, what programs we could pull from every area. So if there's any grants or first-time homebuyer programs or non-first-time homebuyer programs in the area, and things we could take advantage of for each location.
Thank you.
You're welcome. Well, I think that wraps us up, guys. Oh, sure.
One more question for Craig. All right, so. All right, so for estate planning, life insurance is also under estate planning. There's a story that I was told, and it really opened up my mind. The person who died had life insurance, but then her property, I think she didn't write a will or anything, and I heard that it ended up going back to the some organization like nonprofit or like the orphanage. So the other person couldn't clearly tell me what really had happened, but I think we need to get more educated when it comes to estate planning, because some people think that they have life insurance and that's it.
Yeah, and life insurance, everyone just thinks of term life insurance. There's a thing called whole life insurance, and whole, like, individualized cash value life insurance is something that, one, is a great way, I should have talked about this actually too, kind of build and grow generational wealth, because everyone has life insurance that costs maybe $10 a month that caps you out maybe up to $1 million. But once you die, like, that money that you spent toward is basically gone, and it doesn't get passed down to your family. With whole life insurance, it's a way that it's a little bit more expensive, but the fact is that when you die, it's called a cash value benefit that gets passed down to your heirs. So that's something that, if you guys heard of, like, the Rockefeller family, that's what they use to kind of build their empire, their wealth, because with that, not only does it provide a death benefit for your family, but you could use the cash value in that life insurance to actually invest in real estate. And that's one of the ways that a lot of people kind of help build their wealth, is by, one, having that basic a security blanket of having that that death benefit in whole life insurance, while also funding your life and your investments. To answer your question, if you have, every life insurance have a beneficiary designation, and if you don't, if either that person's already dead, unfortunately, or if you don't have one, then it usually goes to someone in your family first. So I'm guessing if it went back to an orphanage, then most likely they didn't have any family. That's my guess. I'm not quite sure. But usually with life insurance, it always has, you have to designate, usually if it's your spouse or kids. If you don't have kids, you have to have some type of beneficiary when you start the insurance. And if they unfortunately pass before you do, then if you don't have any family members, then it goes to the government, but that's kind of like the last case scenario. But I may be wrong. There might be some other thing with that story that I'm not knowing about, but that's the big gist. Yeah, you could change anytime. It's something for within a estate plan. Let's say obviously you get divorced and you get remarried. That's something that you definitely need to change your beneficiaries, because obviously you don't want your money to go to your ex when you have your current spouse with kids already. So that's another thing. But yes, definitely getting knowledge on an estate plan. I feel like that's my kind of goal, is to get people at least informed of what it is. And please, if anyone has any questions, just like let me know, like offline, and I could definitely put you in contact with attorneys that could give you way more knowledge information than I can. Like, I have a very basic knowledge, but I have attorneys that can sit down with you for at least an hour for free and just go over your situation and kind of help tailor what your needs are, and at least give you an idea of the best case scenario of what you could do to kind of start this process, because there's no point in building wealth through like real estate if you're not trying to also protect the money and that you have currently and helping it grow through tax savings and all those other benefits. So that's all I have, unless anyone else has any other questions. Yep.
To purchase a home, must you be a citizen or a green card holder? You say yes. But how about people that are alien holder and have authorization?
Yes, that is something I did want to add.
Okay.
Yes,
Yeah.
that is also.
Because some people sometimes are skeptical for the fact that they feel like if they're not a green card holder, they are considered as illegal.
Yes, that is something I did want to add. So either a resident green card holder or a permanent resident alien is okay
Okay.
to own a home. Yes.
Sure. Thank you.
Yes, you're welcome. I'm also going to go ahead and pass around a sign-in sheet if you guys don't mind signing in. That way, if we have any additional information or if you guys have any questions that you didn't think of at the time, we're happy to answer those.
Another question? Somebody had another question? Okay. Oh, yes. That is also a QR code. Anybody here love wasting time? No? Got one. So you spend an hour, you drove out here, you spent an hour listening to us talk, right? Some of you fell asleep, I saw it. But those of you that came out here, right, if you do not, use that sheet, leave us your information. There's no way that we can get you the resources that we talked about, right? Estate planning, investing, mortgage lending. Like Greg said, even if you don't utilize us for a real estate need, doctors, dentists, lawyers, therapists, we work with all types of trades, all types of people. Get a bang for your buck. You spend an hour here, you might as well get something from it. So you can use the sign-in sheet, you can use the QR code to leave us your information. It's not to spam call you, it's not to send you 1,000 texts. We have a rule in our office, we are not allowed to call you over 4 times a year unless you want us to, right? And that call is, hey, how you doing? Anything I can do for you? Nope, have a good one. So please, please, please don't make this wasted time. And a special thanks to Linda, also on the Waldner Winters team, for joining us here. That's our team videographer and professional hugger. She will hug everyone. Thank you so much again. Also, one last favor, if I may. Everybody that has their smartphone on you, if you could pull that out for me. Go to www.review.com. Just give me a thumbs up once you get there. www.review.com. Yep, www.review.com. You should see a few stars there. Hit the one on the far right for me. Write something very nice. If you want to mention us by name, Greg, Tay, Victoria, just how we did. If you liked it, if you didn't like it, leave us a review. Really does help get the word out so we can continue spreading education like this. We really appreciate it. And another thanks to Apostle Clement and Lady Alice, again, for allowing us this time. We do not take it lightly that you would allow us to do this, so thank you so much.